And then once I saw price begin to slow down, momentum curled up, big buyers in the tape. I'm at the low of day. I'm looking for the bounce off the low of day, and there's my reversal pattern off the low of day for a two-step pattern long. Guys, total up here. Right here, we took, 56 ticks out of the market, almost $600 in the first couple hours of trading this morning. All right, guys, and again, it all started with identifying that head and shoulders pattern the right way and knowing what to do. We'll talk more about that tomorrow in the trade room, guys, and of course, we talked about it in the trading today. All right, over to the euro now. This is the fourth trade of the morning. Now, remember how we talked about we had that wedge pattern before on the euro? Remember that before? We were talking about how we had that wedge pattern and how we had to wait for price, right, to break out of this wedge pattern. Well, guess what? It did. It broke the downside, and when it did, we were waiting for it. Now, follow me down bottom here. Here's a 34 range. This is my slow chart of the euro, and you'll see we have a double bottom here, right? Double bottom. Once I broke that double bottom, that further solidified that we were looking good to the short side. Okay, so slower time frame confirmed. Once I broke to the downside here below 2250. Okay, come back over now to my fast time frame, and now we'll plan the entry. Here's my 2250. We broke below 2250 outside of the wedge pattern. We broke below the double bottom. We come down, mark up our support. Our swing low is broken. Once we break that swing low, 2238 was my fill. 2 off at 4, 2 off at 2. That's 12 ticks or 150 USD. So at 940 in the euro, we continue to wait for high percentage patterns. We made a great amount of money on the crude oil off that head and shoulders pattern. Now here in the euro, we had to wait for it to break that wedge pattern. We also knew, of course, on the slower time frame, it just now broken below that double bottom. So when we start seeing things like this, it's a no-brainer for us. Take that trade short. All right, let's keep moving. Next up here is on the S&P. Now, this is kind of a frustrating trade in the S&P. We like to get the S&P involved. Not my favorite market because of things like this. Now, first of all, guys, I want to remind you, well, let's focus first on the slow time frame first, right? Lower left-hand corner. Okay, I'm sorry, lower right-hand corner. Other left, right? My other left. Now, here's my slower time frame. Okay, here's my slow time frame. And on my slow time frame, I want you guys to focus right here. See this area right here? We've got trend lines. Okay, trend lines. And we also had, right, this double bottom. Okay, this is a double bottom right here. This area right here, 85, right, even, double bottom. So this is a very tough spot, right? What do we know about head and shoulders? Double bottoms, right? They're all very, very whippy, very indecisive around those areas. Double bottoms, trend lines, open and close levels. We saw the head and shoulders pattern, guys. Whenever these levels are broken, it's always going to get real tough to tell when it's actually truly broken, because you've got rookies jumping in early, you've got big money buyers and sellers jumping in late. It's tough to tell sometimes if this double bottom is broken. And so because we have these trend lines in our way and we have the double bottom right there, we knew right away there's going to be sellers pushing down, buyers pushing up. And because it's the S&P is such a high volume market that it can be difficult to really tell when that big volume steps in to confirm your entry. So this was setting up to be a challenging trade from the very beginning. Then we throw in the fact here over the left side here now, right, bottom left, here's my pace of tape. Now, right when we went in and began looking for this entry in the pace of tape, what do we see? Red pace of tape. Oh, no. So right when I begin to look for the entry here, the speed starts slowing down, guys. Slowing speed's never good. So slowing speed in a very bad spot. Now, guys, we saw a bunch of buyers, and my exact words were, I have a feeling this market's going to rise, but it's going to take a small miracle to get it done easily. And, of course, now up top here, you can see here's our trade. Okay, so looking for a breaker pattern long. We bounced off the low of day. We come up, mark up our swing high, and then we break above the swing high. So you can see it's a real easy pattern. 86.25 was my fill. But what happened was we had slow speed, right? The tough location already. We already knew this was going to be a challenge. But I had a feeling, though, looking at the price action, reading tape, that this market wanted to jump. We kept seeing increasing speed come back in. We kept seeing more buyers than sellers. It just felt like the buyers were in control. And as you can see, we ended up fluttering up here, right? But as Just like I said though, it took a small miracle to get that trade to rise. Alright, so it took over an hour just to get that trade to move itself up there, guys. So we did the right thing. We gave it a shot. We didn't see it really line up. Well, it lined up. It triggered. We gave it a shot, knowing what was in our way here, knowing the challenges ahead. I didn't give it too much room to run here. So once I saw it go back towards my entry, I get out of the trade for a scratch trade, right? 86.25 in, 86.25 out, nothing in, nothing out for our only trade on the S&P. All right, guys, and then of course we start at this point now. Now at 11 o'clock, we began to see what I talked about earlier, which is called lagging momentum. Now, momentum is one of those indicators that's easy to learn, but can be a little more difficult in the heat of the battle. Now, on this example, guys, I want to show you guys what lagging momentum means. Now, remember our rules. Right? What do our rules tell us? Our rules tell us I want to make sure momentum confirms the order. Well, what happens if momentum never confirms? We can't take the trade. Now, here's two examples here. The first one on crude. Now, this one, of course, on crude here, right, was a two-step pattern short. Now, look right here, right? This is where the move happened. Okay, but the move happened, and then momentum confirmed. Okay, we had the move dropped all the way down, and then momentum decided to shift. So, of course, by the time momentum shifted, I was completely out of luck. I'm not going to jump in late. Momentum was lagging. And then, of course, over here on the right, on the S&P, right, very similar. This is a wave pattern. And my goal here is to get short right at this 86, 92, 86, 87 even. But look, price comes down, and then momentum confirms. Right? Remember, I want momentum curled and pointed down. Okay, so what happened is by the time momentum had curled over, the price had already moved on us. And so once again, this lagging momentum. Now keep an eye on this stuff, guys, because this is going to sneak up on you here late in the morning like this. Okay, lagging momentum. Momentum that lags like this tells us there's not enough conviction, there's not enough volume, there are not enough people in the market that can move this price around and get momentum to give us what we need. This is a definite sign, right? Time to be very careful. Lagging momentum is going to result in whippy price action. You'll be in late, you'll be in early. When you start seeing stuff like this, we knew, of course, FOMC day was here, so we knew better than to look past this stuff. But this is a great definition, though, great example here of lagging momentum. Okay, so watch that momentum indicator closely, and you'll see what I mean, and use that as a heads up. Okay, so after that, we knew once we started seeing this lagging momentum, we really had to be careful now. The final trade, though, 11:15, we had just begun to wrap things up here. We really couldn't resist this trade, no matter what time of day it is. Whenever we see crude drop like a rock like this, all right, big drop down, I'm expecting a big bounce back up, and that's exactly what we got. So here at 11 o'clock, we started seeing the crude sell off. Comes down, right, tests our support level down here. We're going to break above this swing high. That's going to be our two-step pattern long. You can see here just how challenging this market really was, because even after it gave us our +4, +8, right, there's our +4 and our +8, it then got sucked back down and then reversed for a nice big strong winner there. So a little bit frustrating. This, of course, all because low volume, end of the morning, FOMC day. But here at 11:15, though, in the crude, entry there was at 59s. We took 2 off at 4, 1 off at 1, 1 off at 1 for 17 ticks, 170 USD. Guys, at the end of the day, lots of learning examples today, guys. Great environment to learn about FOMC day. We learned about double tops and bottoms today. We talked about lagging momentum. We saw the wedge pattern, guys. Boy, we really did a lot of trading and a lot of learning today, right? So make sure you guys come out and join us tomorrow. 82 ticks, 85, so $850 today, guys. Another winning day here in the live trade room. Let's prep for tomorrow. Tomorrow's Thursday, June 24th. We got 8:30 durable goods orders and jobless claims. 10:30 tomorrow, we got natural gas report. And 11:30, we got that special webinar tomorrow, guys. So you're going to want to be here for that. And don't forget, my name is Joseph James. We'll see you guys tomorrow morning. 7:45 a.m. will open up. Don't miss tomorrow, guys. 7:45 a.m. Special webinar tomorrow, 11:30. The beginner's course has everything you need to know to trade along with us. It's recommended for all of our trial guests. And remember, guys, if you want more information about our advanced membership, just drop us an email, saleschooltrade.com, or jump on Skype. Again, my name is Joseph. We'll see you guys tomorrow. Bye-bye for now.